Hi guys, I hope you all are fine. Today in this video we are going to talk about asset management. We are going to cover that what is asset management, its strategic plan, its importance and how it's work. So now let's start with it. The first thing that we are going to talk about is what is asset management? That is, what do you mean by asset management? Asset management is the direction of all or part of a client's portfolio by a financial services institution, such usually an investment bank or an individual. Institutions offer investment services along with a wide range of traditional and alternative product offerings that might not be available to the average investor. Asset management refers to the management of investments on behalf of others. The process essentially has a dual mandate: appreciation of a client's assets over time while mitigating risk. There are investment minimums, which means that this service is generally available to high net worth individuals, government entities, corporations, and financial intermediaries. So basically, asset management is the process of developing, operating, maintaining, and selling assets in a cost effective manner. To the asset manager, they determine that what investment to make or avoid so that the client's portfolio will grow. It includes rigorous research utilizing both macro and micro analytical tools. So basically, asset management is managing the asset of a client so such that its portfolio will grow. So the next thing that we are going to talk about is the importance of asset management. There are several reasons why business should be concerned about asset management. And that reason includes: the first one enables a firm to keep tabs on all of its assets. The process makes it easy for organizations to keep track of their assets, whether liquid or fixed. Firm owners will know whether the assets are located, where the assets are located, how they are being put to use, and whether there are changes made to them. Consequently, the recovery of assets can be done more efficiently, hence leading to higher returns. The second one is helps guarantee the accuracy of amortization rates. Since assets are checked on a regular basis, the process of asset management ensures that the financial statements associated with them are kept updated. The third one is helps identify and manage risk. Asset management encompasses the identification and management of risk that arises from the utilization and ownership of certain assets. This means that a firm will always be prepared to counter any risk that comes its way. The fourth one is removes ghost assets in the company's inventory. Instances exist where lost, damaged, or stolen assets are still recorded on the books. With the strategic asset management plan, the firm's owners will be aware of the assets that have been lost and thus not keep recording them in the books. So these are the various important reasons that why asset management is necessary. It helps the firm to maintain to keep its financial statement updated. It also helps the firm to be informed about the risk so that they will be ready to fight any risk or to overcome any risk that will be coming in the future. It also helps the company to see whether they are recording the inventories that are being lost or managed or damaged. So the next thing that we are going to talk about is developing a strategic asset management plan. Asset ownership is part of any public or private enterprise. To manage the assets effectively, a firm owner needs to develop a strategic plan. Now, that strategic plan consists of: first, complete an asset inventory; second, compute life cycle cost; third, set levels of service; and fourth, exercise long term financial planning. So, the first one is complete an asset inventory. Before anything else, an owner needs to take count of all the assets that he owns. If he is not aware of the exact number of assets in his inventory, then he won't manage them effectively. When preparing an inventory of company assets, the following should be included: total counts of assets, where the assets are, the value of each asset, when the assets were acquired, and the last is the expected life cycles of the assets. Now, the second is compute life cycle cost. If a business owner wants his asset management plan to be precise, then he should calculate the entire life cycle cost of each asset. Many company owners make the mistake of calculating only the initial purchase cost. During the asset's life cycle, additional costs are likely to come up, such as maintenance, expenses, condition and performance modeling, as well as disposable cost. So, computing life cycle cost of each asset is necessary. The third one is set levels of services. After computing the life cycle cost, the next step is to set levels of service. Put simply, it means outlining the overall quality, capacity, and role of the different services that the assets provide. In doing so, a firm's owner can then determine the operating, maintenance, and renewal activities needed to keep the assets in good condition. The fourth one is exercise long term financial planning. Ideally, the asset management process that a firm owner adapts should easily translate into long term financial plans. With a good financial plan in place, the owner can then assess which objectives are feasible and which one needs to be prioritized. So these are the steps that has to be developed for a strategic asset management plan. So these include complete an asset inventory, that the owner should know that how many assets he is having, what is the value of each assets, but when the assets were acquired, and the expected life cycle of the assets. After knowing the history, after having all the information about the asset, he should compute the life cycle cost of each assets, so that he can know that what are the maintenance expenses, condition and performance modeling, and the disposable cost. Now, the next thing, after computing life cycle costs, he should set level of services, so that a firm's owner can determine operating, maintenance, and renewal activities that are needed to keep the assets in good condition. And last one is exercise long-term financial planning. That is that the asset management process that the firm owner adapts should easily translate into long-term financial goal, so that he can know that which objectives are feasible and which ones are not. Now, the next thing that we are going to talk about is how does asset management work. Asset management encompasses a holistic view of the entire life cycle of an asset. So, in terms of a piece of machinery, this is its life cycle from procurement and implementation through to renewal and disposal. Although asset management can be implemented through spreadsheets, the most effective systems are those that use the relevant software. Such software can collect and analyze data efficiently, so that the decisions about the management of assets can be made. The consequences of each activity for an asset can be monitored, so that a review of the cost benefit analysis can be made. So, this is how the asset management work, that it encompasses a holistic view of the entire life cycle, as we can see in this image as well. That is, it starts from the stock distribution, installation, and lead to the disposal. So this is the machinery life cycle, we can say, that starts from procurement and that end into renewal and disposal. So now the next thing that we are going to talk about is the benefit of the asset management. There are many benefits of adopting an asset management strategy. These include improving acquisition and use. Second is improving compliance. Third is individual asset management. So, the first thing that we are going to talk about is improving acquisition and use. By keeping tabs on a company's assets throughout their life cycle, A firm owner can improve their technique of acquiring and using assets. A good case in point is Cisco Systems, which was able to reduce costs by executing PC asset management. When implementing such a strategy, the company discovered wasteful purchasing practices, which is solved by developing a better strategy for buying the equipment needed by workers. The second benefit is improving compliance. Government agencies, non-profit organizations, and companies are required to provide comprehensive reports on how they acquire, utilize, and dispose of assets. To ease the reporting process, a majority of them record their asset information in a central database. In such a way, when they need to compile the reports at the end of their financial year, they can easily access all the information they need. The third benefit is individual asset management. Asset management for individuals is roughly synonymous with wealth management. It refers to managing an individual's investment or estate. So these are the three benefits of asset management, that it helps us or it improves the acquisition and use. The firm can improve their technique of acquiring and using an asset. Even by adopting a better strategy, they can bet the equipment that is needed by the worker, and they can also reduce their cost as well. The second one is improving compliance. That is that every company has to submit the report of their assets at the end of the year. So by recording the information of all the assets in the central database, they can compile it in the report at the end of the year, and they can easily access all the information they need. The third one is individual asset management. Just like the individual manage its wealth, similarly, the individual asset management is basically managing the assets individually. That is managing individuals' investments or estate. It is just like the wealth management. The next thing that we are going to talk about is developing an asset management plan. So, developing an asset management plan and having asset management software to support this is instrumental in achieving the asset management objectives. But where do you start? There are four steps to developing an effective asset management. These steps include set the objectives, create a strategy, manage risk, and last one is monitor and review. So, the first one is set the objective. These need to be aligned with the corporate objectives, and when setting, considering consideration needs to be given to the asset management challenges, aims, priorities, and, and capabilities of the business. Ask yourself, what is the business trying to achieve, and how should objective in the asset management plan achieve this? When setting objectives, always make sure that they are smart. That is, they are specific, measurable, achievable, realistic, and time bound. They need to be aligned with the company mission, vision, and goals. The next step is create a strategy. Objectives can only be met if you have a strategy and action in place to meet them. At this stage, it is a good opportunity to carry out an audit of your assets and create an up to date inventory. When reviewing your assets, consider the following questions: what assets belong to the business? Where are they? What condition are they in? What is the remaining lifespan? And the last one is, what is the economic value? Once this has been completed, the next stage is to determine and plan against potential risk to the business. The third step is manage risk. There are four main reasons why an asset can fail. The first one, a failure to meet demand. Second, a failure in levels of services. Third, an economic failure, the operation costs exceed the cost of asset. And the last one is end of life. It ceases to function. Once this task is complete, the level of risk can then be measured against the impact on the rest of the business. The asset management plan can then prioritize between those assets that have a higher detrimental risk to the business so that they can be acted upon first. That is, planning ahead to prevent that failure. The next step is monitor and review. This is the final step. the final step in the process. But once an asset management plan is operational, this process is live throughout the asset life cycle. Such a practice permits you to monitor the efficiency and cost effectiveness of your assets. Accurate decisions can be made against your assets, such as updating or amending maintenance policies, injecting cash into upgrades, or investing capital into new assets. Effective asset management software gives a much broader, holistic overview of a business than the fleet management system alone. So these were the main four steps for developing an asset management plan. This includes setting the objective, that you have to set the objective of what you want to achieve. It can be growing your investment, or adding more investment to your portfolio. Then creating a strategy. Then the company or the owner creates the strategy to achieve that goals. Then we measure the risk, that which objective is more risky and which is not, so that the owner can make plans to reduce the risk earlier only, like he will be ahead of if he will be planning ahead to prevent that failure. And the last one is monitor and review. After the plan is operational, that is, it is set upon the action, the owner has to monitor and review that how the plan is going. If there is any drawbacks, then he has to make sure that he overcomes that. Now, the next thing that we are going to talk about is the summary. Asset management is simply a system that helps companies keep track of all their assets, such as vehicles, equipment, and, and investments. Keeping tabs on the assets helps streamline operations, especially in relation to their sale or disposal. The process also minimizes the chance of recording ghost assets, since all the available assets are well accounted for. So basically, asset management is the management of assets of the clients, that is done by a financial institutions. Asset management helps the companies to maintain the record of their assets, to minimize their risk, and it also minimizes chance of recording ghost assets. It helps the companies as well to increase their portfolio. Thank you. That's all for today. Have a nice day.